I'm just looking at the numbers, and I do have to say, I was a bit taken aback here. I mean, we're seeing stronger growth than we saw during the holiday season. Online sales up 9%, but purchases online of clothing up 14%, outpacing the broader number. What does that say that clothing sales are up 14%?
Well, it says that the consumer is out shopping. They want newness. And apparel, they were cooped up in January. We had some tough weather in January. They want some spring clothing, and they're buying in-store and online. I think you look at the 2% growth in-store retail, that's very healthy, and the 9% growth online, very strong. Apparel, quite good. Restaurants, quite strong. So what it's saying is you came out of the fourth quarter earnings season, as you said, with the consumer shopping. Earnings were relatively healthy, most of the companies beating expectations. And this is now the first month of the first quarter of this year, 24 fiscal year. And overall, you're seeing consumers still shopping.
So Steve, you said that 2% of in-store shopping is healthy. I did want to ask you about this. I want to lean on your experience as formerly being the CEO of Saks. Mall-based retailers, they had a pretty tough quarter overall. I'm looking at Nordstrom, I'm looking at Foot Locker, I'm looking at Macy's closing 150 stores. The fact that we only saw 2% growth in-store, what does that mean about the future of what used to be an American staple, the mall?
You know, I think, and again, now I'm talking about my own perspective. This isn't a Mastercard numbers or thoughts. I think that the middle of the market, where some of the department stores are sitting, are having to remake and reinvent themselves. They're looking at different ways, whether it's different formats, different types of relationships with the vendors, such as concessions. They really have to change their game and up the game. The value players are doing exceptionally well. Those are the other number of brands that fit within that. And examples would be things like the TJX, Ross Burlington, are all performing very well. But the department stores have had a tougher game. And I think that you're seeing changes that are going on. A number of the brands in the middle, the department stores, are being quite creative in what they're doing. But I think that change is what they need to be doing.
All right, I want to come back to the report. Restaurant sales, they were up 6% year over year. Part of that's Valentine's Day. It's obviously a big boost for restaurant sales. But over the last couple of months, we've seen more people go towards the experience as opposed to physical things. Where's the consumer at right now? We've heard the consumer's stretched. Credit cards are at historic highs, not only the rates, but the amount owed. Where do you see the consumer at, and how important is it for the consumer to see these rate cuts?
Well, I think that the consumer is stretched. Experiences, though, still matter. Remember, during the pandemic, people were stuck at home. They still are in the mode where they want to get out, they want to travel, where they have resources. The luxury consumer is very much still experiencing restaurants and traveling. You see it, try to get a restaurant reservation in New York City, still very tough. So I think the consumer is feeling a pinch, but it varies by segment of the consumer. The high-end consumer tied much more to the stock market, which is performing very well. The lower-end consumer, who's lost some of the support programs from the government, is very stretched.